We want to turn nature into a fiduciary-grade asset class. We want to make sure that we can invest into nature as if it was, and it is, critical infrastructure. Currently, we can't do that.
Welcome to the Regeneration Will Be Funded. I'm your host, Matthew Monahan, and in this series, we're having conversations about regenerative finance, technology, and our living planet. How can we build an economy that's in service to life? Brought to you by Ma Earth. You can find all of our conversations at maearth.com. Thanks for joining us. Today's guest is Martin Stuchtey. Martin was the author of A Good Disruption, Redefining Growth in the 21st Century. He was also the founding and managing partner at Systemic, a group set up to help businesses and governments achieve the Paris Climate Agreement and Sustainable Development Goals. Now Martin is working on a really interesting new initiative called the Landbanking Group, which is bringing together a stack of tools around data reporting, legal contracts, and funding infrastructure, designed to put nature on the balance sheet and be treated as an asset so that land stewards can be rewarded for the value created by ecosystem services. Martin is clearly a seasoned pro in the space with an impressive communication style and great starting momentum. I suspect we'll be hearing more from the Landbanking Group in the future, so I hope this conversation can help you get a sense of what's being built here. On to the show with Martin Stuchtey. We're here today with Martin Stuchtey. He is the founder and CEO of the Landbanking Group. Thank you, Martin, for doing this.
Hey, Matthew.
And how's your New York Climate Week going so far?
It's good. It's always nice to reconnect. I mean, we all need that. We are part of a journey. We are part of a struggle. And so regrouping, reconvening is always a nice thing. But we shouldn't get drunk with that sense of agreeing with each other. I think it's the first time that we came back together in a world that is likely 1.5 degrees. It's the first time we came back together where we are starting to accept overshoot. It's the first time we came together where we can't trust our biggest friend, multilateralism, anymore. And so when we have those conversations, we also have to ask ourselves whether we get it right as a community, whether we are telling the right story. And why is it that all over the world, some people won't find our narrative attractive? So it's also a moment of reflection. But otherwise, it's always wonderful. New York is a good place for that, because New York is that city with a sense of possibility, and I think we all have to regroup around the sense of possibility.
And what are those possibilities in the storytelling and narrative space that you're sensing? And what do you feel like we're not getting right on that front?
I think we are still selling a less bad. I think we should start selling a good. I think we need to realign our emotional, intuitive sense of wealth with the economic sense of wealth. Nature is value, nature capital is value, human capital is value. Getting that into the equation is important. And that's not a minus narrative, that's a plus narrative.
So instead of decarbonization, it's something else.
Yeah, exactly. Decarbonization is dentist. So we can't sell that. I think economically, it's right to say that we need to give everything its ecological price, and we need to pay for what is now an externality. Why not why not find it attractive? Why not create a FOMO around owning positive attributions to nature capital?
And is this what you mean when you say prosperity 2.0?
Yeah. Look, I mean, That's a very easy story to tell, and there's even a lot of scientific evidence for that, we live in a world where we see labor productivity growing, we see GDP is growing, we see, although less, employment growing, where we see even less, though, medium incomes growing. But what we don't see growing is the sum of the capitals, social capital, human capital, produced financial capital, and nature capital. And the reason for that is that we are losing it. We are degrading more nature capital than we are able to rebuild other stocks of wealth constituting capital. And that's a new story. That's a story of us growing poor. And that's not just sort of this minor a correction that we have to make at the edges of the economy. That is something wrong at the heart of our economic growth model.
Okay, well, I want to get into that deeper, but maybe first, as a bit more background, how did you come into this work, and what have you been up to with systemic and some of your prior work before the Landbanking Group?
It started with me being a geologist, out of all professions. Geology is a really slow business if you think about it. Nothing happens for millions of years, nothing, until something does happen. And a bigger thing happening in geology we call a state shift. And I wouldn't have thought that within my lifetime I actually would be part of such a state shift, that within our generation we are confronted with a 5 million years singularity called climate and a 50 million years singularity called biodiversity loss. And that is so big that it's almost a perfect hack to our Kahneman's brain. And the only thing we can deal with it is to utterly ignore it, which I did by becoming a consultant, going to McKinsey, which was fun. But then there was a moment where exactly this notion that sort of driving growth is actually not correlated with the outcomes that we intuitively and as a society should expect, and that we are up against a challenge that can't be sort of solved by the sum of individual decisions. It's systemic, the problem, and so the answer must be systemic. And then 7 years ago, we created a company, which is now a group of companies with an enormously energetic and talented group of folks, which is wrestling with these big system transitions: energy transition, industrial resource transition, aka circular economy, which has been a bit of my pet area of engagement, but also the global land use transition. And the energy transition starts getting underway, far too slow, and we know that. But still, sort of, it starts to be a dreamable dream or a thinkable future with everything that we see from storage to renewables. The industrial resource transition is also getting underway, not as fast, much more complex, deep configurations of value chains. And still you start seeing sort of some gravitational forces. And I also felt that I've said and done and written everything that you can say about it. We don't have a good answer for the global land use transition. We need to find a way to store 8 to 14 gigatons in nature. And we need to stop and reverse the loss of nature and biodiversity. And we don't have a plan. We don't have a political plan which goes beyond a tagline 30 by 30. We don't have an economic, let alone a business plan. And that now nicely reconnected sort of to this analysis that I talked about, which I'd written about in the book, Redefining Growth in the 21st Century, how to bring nature capital onto the balance sheet, how to bring nature capital back into our definition of what is wealth, what is prosperity 2.0. And back to your first question, I happen to think that this is much more consistent with how we think and feel, and it's less of a minus and it's part of a positive story. We want to be attributed to creating, to accumulating, to accruing, and accruing nature capital could be such a focus point that our society could convene around.
Great. And so that takes us really to the thesis I get behind the Landbanking Group. So maybe broad strokes, what is the Landbanking Group and where are you at in that journey?
It's wonderfully demanding, but also inspiring journey. Sometimes I'm sitting there wondering why I'm doing this to myself at my tender age, but it's an idea that's worth trying. In a way, we want to turn nature into a fiduciary grade asset class. We want to make sure that we can invest into nature as if it was, and it is, critical infrastructure. Currently, we can't do that. We don't have the infrastructure to do that. And we want to create the hardest, sort of the infrastructure to make nature uplift, nature preservation, verified, the hardest currency.
How is that done? I mean, this is a very big idea. And like you said, we don't really have a plan, but I get the sense you are working on this plan. So
we launched a platform last week, so it's real. So it's really, it's coded, it's engineered, which essentially it tries to bring a couple of innovations together in an integrated end-to-end system. And it starts with the ability to assess every pixel of the planet with regard to its ecological outcomes. That is carbon, that is water holding capacity, that is soil quality, and it's particularly the different vectors of biodiversity as the ultimate lead indicator. Now, that allows us to give every piece of the planet, every polygon, a passport, an ecological passport, which we call a biophysical nature capital account. And that can serve as an underlying for the issuance of nature service agreements. And because these agreements always have a biophysical analog, a biophysical twin back in nature, where they are dynamically, traceably, immutably linked, creates a very hard collateral, so that with those underlyings, with those collaterals, we can start dreaming of nature-based assets, nature-based equitable securities, nature-based currencies one day. And then very quickly we are in a vision, in a narrative around Prosperity 2.0.
Okay, so if I'm understanding correctly, we really are trying to flip the paradigm where nature becomes a part of our assets, part of our wealth, part of our balance sheet. And whereas right now we have an economy that only recognizes it in kind of the extractive sense, or when it's dead and turned into timber or whatnot. And what you're really suggesting here is that there's financial instrument innovation, data innovation, legal innovation that Landbanking Group, along with a movement afoot, is working on in order to provide this needed infrastructure so that nature can become the collateral and an investable asset.
Currently, we got ourselves into a really absurdly interesting spot where 85% of people have nature as a screensaver, which tells you something about how we think about value. And where the only way sort of to bring it to market is by cutting it down. And that is, of course, something that needs to be resolved. If it is that this is the ultimate experience, I mean, otherwise we wouldn't have it as a screensaver. Otherwise, we wouldn't spend the 2 best weeks of the year there. If it's the thing that actually delivers us temperature regulation, if it's the thing that makes sure that we still can actually get our harvests in, if it's the thing that actually makes sure that it stabilizes floods and ourselves during floods and droughts. And if it's the thing sort of to go to the bigger picture, which has on our journey to 420 ppm actually served as our best friend and buffer and dampener of those effects until now, where the nature bank, the ecosystem bank is empty and we don't have that dampening effect anymore. If all of that is true, sort of why not actually treat it as if it was what it was? Critical infrastructure that deserves maintenance and investments and expansion investments like any other infrastructure category, but for that we need to have ways to invest into it, and that's what we're trying to support with the infrastructure.
Yeah, couldn't agree more. So why don't we get into the mechanics of how does this work and kind of what are the innovations that you're trying to bring into this space? Maybe if you can walk us through, and we can use like an example to run through the workflow or the experience that people can have.
Let's start from the back end and said, why on earth should someone care, and why on earth would someone want to hold a net long position of nature assets or of these nature attribution rights,
Right.
the rights to be able to say and to be able to know that you have accrued nature capital, improved biophysical nature capital uplift. Now, we think there is such a market now, and even more so in the future. Now it's insetters, it's offsetters, it's insurers and investors. And every time I could make a case why this is interesting to know that nature works for me. If you're an insetter, if you're an agro-food company, then you have many problems, but amongst the problems that you have one which is called Scope 3. Now that there are very clear guardrails around how much you are able or allowed to offset, to compensate, and you know how complex and charged that conversation is. Mm-hmm. So you actually have to see how you are reducing emissions or even creating removals within your own value chain. There's a big incentive to do that. How do you do that into complex multi-polygon system with 20,000 growers that actually supply you as an agri-food company? Secondly, you want to show that you live up to nature positive expectations, because there are new wonderful things like voluntary commitments to TNFD and nature positive behaviors. And thirdly, you want to tell your shareholders that you actually get your commodities even in a dry year. Currently, we don't get oranges from the Mediterranean. We don't get mint from Turkey. My favorite brewery just went broke for lack of hop. So this is getting quite real. So are there agro-food companies that actually have an incentive to know that year after year, water holding capacity, soil organic carbon, soil organic matter, shadow trees, biodiversity is improving on the land that you depend on as your critical supply source? That's evident. Insurers, you can't buy a house insurance in California anymore. The R Valley in Germany had I think it was a 30 billion loss event. And you can run attribution models that show you that with the sum of better individual land use decisions, some of that would have been avoidable, and you would have been able to cut the flood peak significantly. Is there an arbitrage opportunity in doing that? It's evidence, a no-brainer. Offsetting. So on the one hand, of course, we still have a carbon offset market, which people shouldn't rush too fast to write off, because it served us well, despite some of the limitations that we see in the model. And then increasingly in New Zealand, in Australia, in the UK, increasingly in other countries, we also have nature or biodiversity compliance markets, biodiv net gain, where all of a sudden you have an opportunity or an obligation actually to do an equivalent deal or compensation deal. And then finally, investors. Conservation-linked bonds, nature asset companies, or just outcome-based funding of conservation as a store of value, as a potential non-correlated allocation within a portfolio, as a dark green Article 9 investment. Increasingly, we start seeing that there could in fact be investment value in that. Mm-hmm. So there is interest to hold, to be able to hold nature assets. And in my vision is that we will be living in an economy where more and more kiosks are opening that actually accept that currency. And the insetting kiosk is open. It's wide open. And that's why we start. Now, to your question, how will that how would such a case look like? Imagine you being a coffee brand, and you know that coffee is increasingly supply constrained, and you have to demonstrate to the market that you are climate and nature positive. Then you would, through us, reach out to your 1,500 growers. We would then onboard through our platform, which is called Landler.io. We would onboard every single one of those polygons, we would immediately, and that takes less than a minute, sort of be able to tell you this is the carbon stock, this is the water holding capacity stock, this is the biodiversity stock, or this is, if we go more specific, these are the shadow trees, for example, that we have. We do that through MRV, monitoring, reporting, verification tech, where we are pulling in data from different sources. Sometimes we develop those models ourselves. So we have a 15-people science team that actually is trained to do that, particularly experienced to work with Earth observation and machine learning. But then, of course, we do a lot of ground truthing and work with these fantastic technologies like digital recognition of genetics, digital recognition of imagery, digital recognition of sounds in order to ground truth and train our models. And so we have created a very strict process of how these models are set up, how they are then validated, how they're verified and later on certified, so that we are able to cover lots and lots of use cases, biome by biome, ecosystem service by ecosystem service, economic demand by economic demand. Now, and once we've done that, first of all, the land steward immediately sort of sees on Landler look, this is how I'm doing. Yeah, this is how I do today, and this is how I have improved over time. All of that is written into a template which we call a nature capital account. So that's where the biophysical that's your biophysical nature account. And now that is then used as an underlying for the contracting engine. And the contracting engine then sort of in a very fast, standardized and legally very well-designed way then creates a contract between you, the many land stewards, and you, the buyer, where every time you say, look, you as a buyer say, every time you deliver a biophysical unit of nature uplift or a biophysical unit of nature preservation. You can also use that in a conservation preservation context. I'll pay you. So I'm your off-taker for ecological uplift. With all the evident benefits, the benefits to the land stewards are easy. So you have a future income stream. You have more choices when you take land use decisions away from destroying your father's and mother's land towards actually securing it. You give it more value. You have a better conversation with your daughters when it comes to handing over the farm or when it comes to the communities that are around a nature conservancy. And you as an investor have evident benefits because with all the safeguards in here, this is sort of helps you to trust that there is really improvement of that infrastructure nature happening in a way, and that's very important, that is balance sheet grade. Chartered accountants tell us you can actually get nature improvements on your balance sheet if it is done on the basis of a contract that is controllable, identifiable, and economically useful. And controllable means that you always need to have a biophysical twin back in nature that is traceable, that's immutably linked, that's also dynamic, so you can actually see whether nature is improving or not. And that's this, and that gives it then also the second aspect. It gives you identifiable. It gives it a legal identity that you can hold and transact, and then all you have to do is to prove that it's economically useful for me. And in the insetter case, that's straightforward. And then you can put it on the balance sheet. And I think a big problem that we had in the past is that our relationship to nature went through the P&L. Right. And Prosperity 2.0 needs to be one where you actually say, look, I'm going to sell you my company, but look at this wonderful stock of nature capital that I've created, that I have attribution rights to, that makes me more valuable, pay more for my company. And that's how we have to think about nature in the future. I'm deeply convinced.
Yeah. Wow. Okay. Well, I know there's a lot there, and I also find it incredibly cogent. I think about farm that I help steward, and when we are making decisions about managing water retention or soil, for example, there's no financial upside virtually at all in the way that we're being measured and that the way we have to measure our capital accounts, because it's like, the harvest of the crops and the animals that we sell, that's kind of your cash flow, your P&L. whether or not we did things to improve long-term soil quality or not does not show up on the balance sheet. Like there's nothing around soil health on the balance sheet today. And we have an incentive, obviously, to take good care of our farms so that we have harvests in the future. But those are very difficult to quantify and typically end up lower on the priority list if you're managing, in a low margin environment with a lot of debt, as most farms do, And so what you're saying at the beginning there was really we have this tsunami of reasons and incentives and different ways that the current economic system and regulatory system is beginning to recognize this need, whether it's through Scope 3, whether it's through, different forms of, voluntary carbon markets and ecological credits, whether it's through, and I'd love to double click on it more, TNFD, the Task Force for Nature Financial Related Disclosures, that businesses, companies, governments, we all collectively can begin to understand better and better and have real financial and legal reasons to put nature on the balance sheet as an asset. So if someone's buying food from our farm, they want to say, hey, Matthew, how do we see the quality of the soil health, and how it's improving over time or degrading? And so bringing it practically to the Landbanking Group, if I onboard into the Landbanking Group and into your MRB system and the buyers on board, then now we can actually create a contractual, recognizable asset class, the soil health, for example, or these indicators around water and biodiversity and whatnot, so that the uplift can have attribution that's discernible, and so that I can get paid for actually increasing the value of the stock rather than just the flow that's coming off the farm. Is that kind of a fair characterization?
Yeah, it changes. It would do two things for you. A, it would allow you to show, look, here is how year after year I've created uplift. So I'm really accruing nature capital. Isn't that cool? Or nature, that would be soil organic matter. That would be soil organic carbon, water holding capacity. It would be the kilograms of pollinator insect biomass. It would be the number of pasture birds breeding, whatever. So, and that's then in the end a question of how exactly one would agree on those measurements. Science has an opinion, and we are implementing that. But at the same time, I think it's also legitimate to shape this in ways that are meaningful to the potential investors. Water holding capacity, for example, is currently something that lots of agri-food companies are interested in, because that's their tacit insurance for the next year of drought, which is just around the corner, as we know. Now, that's the one thing it does for you. The other thing it does for you, it shows how it shows your ecological creditworthiness, because the nice thing, particularly about Earth observation, is we can reel back 5 to 10 years, and we can also show that you have that you have performed well in the past, and that you're operating at a very high regenerative ecological level, which is one of the problems that at least the more naive designs of carbon markets had, where you were only rewarded for the uplift and you weren't rewarded for the preservation element. That's sort of how we got into doubts how that can be the right element, actually, or the right instrument to protect standing ecosystems. And that's and basically you can actually enter the game, the regenerative game, with a very high ecological credit rating. Now, and that creates better conversation with a whole bunch of folks. I mean, the daughters who, when it comes to taking over the farm, even at a moment where we're not monetizing any of this yet, it creates psychologically a better conversation if you can say, look, I have been a good steward of this land. Something has been growing here. And that already is part of the cultural revolution that we need. But then you have a much better conversation with your bank. Banks are telling us, look, we know everything about our industrial and our real estate customers. We don't know a thing about our landowners and farming clients. Although the ecological health of a piece of land is the best predictor of how much wealth there is actually in it, and how we should be negotiating the next loan, or how we should be negotiating whatever, a sale or whatever. And you will have a much better conversation to any potential sort of business partner who is interested in your ecological health. It could be the local municipal waterworks, by the way, and we have some very nice examples here. Or particularly, it will be the buyers of your apples or of your grapes, because in the future, no product is of worth until you know that where it comes from. In a world of the TNFDs, the CSRDs, the CSDDDs, sort of, I don't have to go into all those explanations, but there is a very benign alphabet soup coming towards us, which forces us to ask where do our products come from.
And are there any more words you can share for people who might be unfamiliar with these?
With the alphabet soup.
The alphabet soup. I can't even barely repeat it all. And I know, we just had some announcements around TNFD here in New York, kicking off Climate Week. But given your expertise in this topic, can you provide any other 101 explainer on this?
TNFD, and that was yesterday, is a breakthrough, and we can't laud and commend the stubbornness and the stringency enough that the TNFD leadership team and the TNFD team has put into this. For the first time, they provided us with a global language of how to deal with the question of how many dependencies and impacts and risks and opportunities actually sit in our businesses with regard to nature. This is sort of, for the first time, it really connects a nexus between the two, which have been separate systems in the past, and now for the first time it's trying to bring it together, not just as a dependency, but also what it does to society impacts, but also what it does to investors' risks, but also what it does to your equity value, because it also allows for opportunities for differentiation. And so it created guardrails and recommendations of how to measure it. And so we have a voluntary emerging voluntary standard of how to talk about business and nature in the future. But then regionally, one level below, we have also the hardwired analogy of it, particularly in Europe, where we are now bringing a couple of initiatives in effect, which are going to change the way you run a business very, very profoundly. Most people don't have that on their radar yet. I think it's going to be very profound. It's the amalgamation of nature disclosure. In Europe, particularly, we call it CSRD. Then nature targets, which comes for certain supply chains, such as the deforestation-free supply chains, but also others. And there's a bit of complexity behind it. Nature taxonomies, where we actually say, if you invest into certain nature assets, we like that, and we will consider that a preferable investment. And nature accounting standards, and sort of bringing those four trends and changes together, that creates quite a powerful framework in which you would think twice how you actually deal with your nature footprint as a company in the future. That is a very, very interesting new landscape that's being created here, where it's much, much harder to brush sort of our nature footprint under the carpet, and it's much, much easier to actually thrive in a competitive environment by being able to show that you have a nature positive vision.
So, I mean, is it fair to say, I mean, these are hopeful developments in creating the enabling conditions where we can really bring this new consciousness around our impact on the planet into our economy? And I mean, how much hope is it giving you that there are all of these new disclosure requirements and kind of rules and agreed upon frameworks? Any critiques of what's just developed?
I think currently we still look at it as the next burden, the next piece of red tape, and if you listen to the conversations that we have in Europe, for example, right now, sort of, can we afford that in a competitive environment? Sometimes they say, look, this is only creating leakage, so the whole stuff will be produced by others who are liable to more lenient rules. But then they all just say, look, we don't have capacity for any more, sort of, we need to have a much more business-friendly Europe, sort of, now to have nature reporting. We can't afford that at all. I think, and that's sort of very much the attempt that we are trying to do, is actually to shift it away from a minus towards a positive, where you actually say, look, being associated with nature positive outcomes, being invested in nature capital is in fact an interesting wealth generating activity.
Yeah. Yeah, well, I definitely agree with the precepts that, we have to do something to really change the nature of capitalism as we know it, to put nature as an asset on the balance sheet. I also do empathize with the pushback that, I think one particular line of inquiry around when we have these types of red tape regulatory requirements, they tend to favor large-scale businesses. And so, will smallholder farmers benefit the same way, or will it only be the big agri-food companies, for example? Because often when you're a large institution, you can afford all of the fancy lawyers and the accountants and just people to make sense of all the alphabet soup. And when you're out on the farm yourself, and you're on a family farm, like, you just don't have time for that. We see this a lot where, even just in small little New Zealand, the emissions trading scheme, which is relatively straightforward compared to a lot of these things, it's enormously complex for smallholder kind of farms and forest projects. And so what tends to happen is it favors the big folks, which tends to then lead to more economies of scale, which tends to then create consolidation of these assets over time. What would you say to all of that?
I mean, the first version of nature markets have been very important, but I think we are starting to see the limitations, and you're talking about one of them. We have created, in one of the most important activity in our economies, we have created the least democratic markets. How is that? So I think we need to change, we need to create markets that are different in a number of ways. And I'm starting with some technicalities, and then I'm getting to the social or to the democracy of those markets. The first thing is we need to move from ex ante to ex post markets. What do you mean by that? An ex ante market is one where you promise me to do something in the future, 30 years of permanence, and which is 7 Brazilian presidential elections away, which is a very hard promise to take, towards post markets where we actually pay on delivery, because that's re-injecting trust. We need to move to a market where the assets hold value even if you haven't done harm in the first place. So that is more the nature of an asset than a compensation market. We have to move to a market where the valuation can in fact be reproduced. So it's not someone telling you in their wisdom that this is the value, but where there's an easy protocol to understand. We have to move to a market where we are less dependent on sometimes oligopolistic verification entities, because they're also making the market slow, and we can't allow the market to be slow, because we are 7 years away from 2030, and we have made very serious commitments in Montreal and in Paris for that. But then we also have to have a market where it's very easy to entry, and where you both on the buy side and on the sell side aren't intermediated because these projects are so complex. So our vision is in the same way that every community on earth, all the way towards the Maasai warriors in Kenya, where I'm just coming from, who do online banking today, it's as easy actually to enter your ecosystem or your nature capital offer to a marketplace, and where it's as easy to buy on that marketplace, because it's all transparent. The contracts are digitized and trustworthy. They sit on a ledger. So how can we actually bring the best of MRV, the best of Web 3.0, the best of good fintech together in a solution that is very democratic and very easy to use, so that the land stewards can focus on what they are good at, stewarding the land, and that the buy side is able to do what they are good at, building financial products, running value chains, etc. And currently we and that requires us actually to move away from a project by project to something that feels a bit more like a platform business, a bit more like a scalable solution. And I think I'm deeply convinced now, after all the work that we have done, that there is a sweet spot that is growing, which does justice to the complexity of nature. So that we are science-based in the way we assess nature uplift, but at the same time, there's justice to financial systems by providing the right information for you to take rapid, trusted, fiduciary-grade decisions where you invest into.
Yeah. Yeah, I like the way you say that in terms of recognizing the complexity of nature. What gives you hope that we are doing that, or that this moment affords that opportunity? Because I think some critiques would be, we've seen a lot of unintended consequences with carbon markets, kind of reducing the problem too much, carbon tunnel vision, et cetera. And, just a worry that if we financialize nature and we can't ever track and recognize everything. And an added secondary component of that, which is like, well, doing this from one platform rules them all, one set of measurements, some company in Europe is going to tell people in Africa what their nature is valued at and what their uplift is and so forth. Like, help me understand what about this moment gives you, faith that we can get over those types of potential roadblocks and challenges.
And President Ruto from Kenya does. There was the African Climate Summit a couple of days ago. Quite something, by the way. We started off talking about New York Climate Week. There are many things we have seen before. African Climate Week was different. There were 20 heads of state from Africa actually standing up and saying, look, we are speaking with one voice now. We'll jointly go to COP28. We want you to be more honest with us in the global north. You haven't been around vaccines, you haven't been around Paris, you haven't been around Los Angeles, Sharm el-Sheikh, you haven't been around Montreal. We want you to be honest and to treat us for real. And you want us to support you on a global agenda. We are prepared to support you on a global agenda, but you need to live up to your promises. So very interesting moment, sort of a completely new kind of energy. But then I had a short opportunity to exchange with the president, and then he said something to that avail that he said, look, to be rich, you need to have something on the balance sheet. Everything needs to be on the balance sheet. Our wealth is not on the balance sheet. If we were putting nature on our balance sheet, you would see how rich we are. And that was a special moment which sort of summarizes our conversation here in a much more succinct way than I was able to deliver. You could see it in his body language, is how that was uplifting. And so it's not the full answer to your question, but it does something by rewarding and giving economic weight and dignity back to those who are stewarding the treasures that we need as a society, that infrastructure. And that, of course, more on a less anecdotal and more technical level. I think when we start building about secondary or tertiary markets, security trading, etc., then we need to make sure that the rewards are disproportionately going back to the originators. But this is now where Web 3.0 comes in, and that's something you can write into a contract. And so we are not as dumb or as generic anymore as we have been in the creation of the first generation of this market. So we can do that. And then Of course, we also need to recognize that it would be utterly naive to say that markets solve all problems of nature and societal equity. Of course not. Nature is spiritual, nature is cultural, nature is aesthetic. I mean, would we manage our monuments, our historic cultural treasures just through the market? Of course we don't. There are pieces of infrastructure that needs to be completely shielded from markets, and we do that. But then there are other pieces of the infrastructure that are already part of a market. I mean, we have a nature market. By the way, we have a nature market that's currently supported by 1.6 trillion in subsidies every time, encouraging us to destroy it. And so saying that we should keep markets out of nature, we should have said that hundreds of years ago, because now the markets are deep in nature. Can we please repair them in such a way that they reward us for preserving and stewarding and safeguarding nature? Because today they reward us for cutting it down, polluting it, and turning it into a dump site. So let's not be black and white of whether a market-based solution is the right answer to everything. Of course it's not. Of course it's not. But I can't see a world in 2030 where we have stopped and reversed the loss of nature in a way that doesn't give markets a beneficial role.
Sure. Yeah. And so, but just to follow up with a little bit more of a nuanced question on that, through our lens in New Zealand, the emissions trading scheme, very well-intentioned effort to price carbon and to make sure that, we're recognizing nature for the value it provides. And fast forward to today, and it's done a lot of good and it's stopped a lot of deforestation. New Zealanders, and I'm not from New Zealand, so I tread carefully to speak on behalf of the country, but there is by and large a recognition of the aesthetic, spiritual, cultural importance and value of native forests. It's a very widespread conversation, and it means a lot to the country, the native trees and the native habitat. And yet, because the financial instrumentation of carbon became so powerful so quickly in recognizing particular species of non-native pine trees that can sequester carbon really fast within 20 to 30 years, even though they essentially die after that. But because of the discount rates and because of the carbon tables and because we don't measure below ground carbon and because the animals in New Zealand don't actually like to eat them, so they're easier to grow than the native species and everything else, there's this enormous financial incentive to turn either cropland or formerly native forests into monocrop pine plantations. And it's been happening over and over, and it's devastating. And you have foreign corporations come in and just because the spreadsheet does this one thing, boom. And so I guess the nuanced follow-up question, accepting the premise that we need to bring nature into the economy more fully, because right now we only recognize it kind of in the extractive sense. How do we ensure that as these economic incentives take hold, that they don't run away? How do we create a dynamic, living, adaptable system that's in tune with the local ecology? Because what's happening in New Zealand is totally different than what's happening in Kenya. And this is, of course, also a question of governance. Like, how do we ensure that, the sovereignty and that decision-making in New Zealand and Kenya is respected? I'm just curious, like, how you're thinking about all of this as you construct the platform.
Look, whatever we do, the next nature markets needs to pass the eucalyptus test. Yeah, so we can't crowd out biodiversity on behalf of eucalyptus forest. I think there is something we can do to systemically address that in terms of measurement, and there's something we can do in terms of market design. In terms of measurement, we always have to make sure that we are measuring biodiversity as a lead and control variable. So never should you be allowed sort of to be accredited a ton of carbon if that has been on the expense of biodiversity. So, and that's by what we do in the Landbanking Group. We wouldn't allow any nature uplift to be signed off if it was at the expense of biodiversity. And of course, we are inspired and excited by all the attempts that come from Tom Krauser and from the entire biodiversity community, Natural History Museum, and the Wallacea, and there's a wonderful community sort of getting really, really deep. The Stanford Nature Capital Project, all of them sort of trying to explain to us that if we find good indicators that tell us about the functional diversity and in the end the biocomplexity of nature, then typically all the others like carbon or water and sort of are also well taken care of. So I think that's we need to get smarter in the way we measure that. However, without getting into indicator wars, that's also something I need to say we don't have time for that. Okay. But then the second one is around market design. I mean, the reason why we got there is because the only idea we had to preserve a native forest was by putting a gun to your head, by saying, we sell you avoided deforestation credits against a baseline that says that we are devils and we would otherwise cut it down. I mean, what human picture of ourselves is that? Rather than to say, this is a treasure, this is this is a cathedral, this is an asset, this is infrastructure, whatever positive language you find, but saying, look, this has an intrinsic value that is good for us, and it's because of that we want to be positively attributed or affiliated to it, and that's why we want to hold attribution rights to its preservation, not because because it's the only way to stop someone to cut it down and to release the carbon. I think it's this is more asset thinking than compensation thinking, and I think it matters.
Yeah. One technical question about biodiversity that I have, given that it's in vogue very much at the moment, as kind of the new goal of so much of this movement, how do we ensure that we're not just counting unique types of species, but that we're also recognizing the actual population quantity of individual species?
I talked about the indicator wars, which aren't wars, which are good academic debates, as long as they don't take us too much time to get to a resolution. Is there sort of one definition, one basket, one indicator that actually helps us to find just the right biodiversity? I'm a bit skeptical here. I think there are a couple of legitimate questions that you can ask to nature, and every time they will massively improve the quality of our decisions of how to deal with a certain landscape or plot of land. Sometimes they are around richness and abundance. Sometimes they are around rarity. Sometimes they are about habitat diversity. Sometimes they are around ecosystem integrity. And sometimes they are around concepts such as biocomplexity. And all of them have a space. I mean, if there is a major initiative to keep the white rhinos, which is a very legitimate objective, then of course counting the white rhinos is a good idea and being sort of focused on the rarity of one species. If it's about preserving the second largest game migration in southern Sudan, the crop antelope, then I think knowing whether it's still 1 million or 500,000 is a valuable outcome. If you work in agriculture and there's habitat diversity, which comes through hedges, which comes through small forests, through sort of some peatland elements, and assuming that just through that offer of habitat, there will be more biodiversity settling in. I think it's a fair assumption you can make. In other places, it's not a fair assumption because there are empty forests where the habitat alone doesn't tell you anything about the forest elephants and the okapi. And then sometimes it's just fair if you, for example, run a conservancy and your promise is actually to keep encroachment out, then ecosystem integrity, there's no logging, there's no grazing, there's no forest fires going on, again, is a legitimate indicator to say that you're doing your job. And so I think there are different legitimate indicators here. I think there will be one segment of the market which is some version of a global biodiversity credit market, which in our philosophy will be a dream, and it would be wonderful, and it will come, and it deserves all our efforts. But it won't be that the nature markets will be just about that. That will be one interesting segment of a nature market, and we have to make choices sort of how we move into those nature markets. But that will be one segment. Here, of course, it would be good to have a slightly more standardized, internationally applicable biodiversity indicator. But we won't live into a future where we first decide that there is this one true indicator, and then the next morning we switch on the global biodiversity markets, and everyone will feel they need to buy our credits. I think this is not what's going to happen.
It's not, I think that's the only part that I'm stuck at, trying to understand the vision of how do we still maintain local or bioregional sovereignty or input into these metrics and these decisions. Is it just going to come from the buyers of the nature uplift or of the credits or whatnot? Is it only going to be a demand function, or is there a way that there's power that resides in the supplier side of this marketplace?
It's fair. I don't have the full answer to that. Sort of, I think in the end, and by the way, that's how Enlightenment and human progress worked in recent centuries. It's going to be a dialogue between scientists and societies that have demands. And if scientists tell us we are not sort of you will find it hard to look nature positive, and we find it hard to sign that off if you come with a very narrow definition of biodiversity that is whatever oblivious to invasive species, that is overcounting, that is giving you a sign off for empty forests. Then you, as a demand side, as a buyer, then you will have to live with that. And so I think this is going to be a constructive dialogue. But I mean, let's also not sort of through that question kill every improvement that we could have, because currently biodiversity is absent from any land use decision. And any biodiversity indicator might get us to 70 or 80%. And then let's afterwards make sure we are using scientific discovery sort of to get better and better. But rather than sort of stop short of the first 75% or 80% improvement, I am sure there are things we can agree on, whether it's better for microbiomes in the soil, whether it's better for breeding birds, whether it's better for pollinator insects. Yeah. Let's not kill this dream that that biodiversity can be improved and measured because we can't agree on the one indicator.
Yeah. I think I guess where I net out on it, it's not just about biodiversity; it's about local governance and kind of. What the Regen Network folks say is kind of like a supplier-led versus a buyer-led marketplace. And yeah, just like a slight hesitation to embrace, fully anything that's all top down. And so just wondering how we kind of make sure we're honoring the pluralistic grassroots, bottoms up approaches here as well.
That's a good conversation. First, it comes from Regen Network, sort of, who is really sort of one of the sources of truth in this whole conversation, and so some of the most advanced thinking is coming from Greg and the team. We haven't, when we talked about democratizing, sort of our conversation wasn't quite complete. I recognize that. I think there are also new ways in which we can actually hand governance back to the originators and to the land stewards through Web3 and through regenerative forms of digitization, and I think we can actually create a much stronger say over how whatever African rangelands communities actually sort of are bringing their ecological contributions to markets. Mm-hmm.
Yeah, and I guess. It's great to hear that you are, also embedded within this Web3 context and seen as a tool for the job. Any other comments on kind of what's happening in the crypto and Web3 space or what you're noticing there?
Look, of course, I recognize that we could tell our story quite differently, sort of much more crypto, much more Web 3.0, much more refi. We decided that we want to draw the attention to the changes that need to be made towards creating an asset character of what we are dealing with here. And that is something that can be done entirely without. If you then go to implement it in a way that is equitable, accessible, democratic, trusted, efficient, then of course immediately you are there. And to me, it's sort of one of the most exciting things, sort of how those line of thought are now connecting. Of course, you need to have trusted data storage. Of course, you need to have smart contracts. Of course, you will end up putting things on a chain. Of course, you will look into sort of how you can do that with mini wallets that actually are low carbon and that are economic to hold for smallholders. I mean, there's this whole world. Sort of we decided to tone that part a bit down, so that it doesn't come across as, look, there's someone seems to have discovered that nature actually can be a crypto asset. I think first we have to think hard what is legally and from a market design and organization required to make sure it has asset character in the first place, and then you can cryptify it.
Mm-hmm. Well, it's incredibly ambitious. I'm really appreciating the fact that I now have it on my radar and am hearing it through your eyes, because you're not only embracing the MRV revolution, but you're integrating all of the changes in accounting. You're thinking about it from a legal perspective, really a paradigm shift to bring nature into an asset class. And then, of course, what the downstream implications of that mean in terms of the investability and all sorts of different instruments that could occur after that. And while still recognizing also the software Web3 revolution afoot as well. So you're bringing a lot of pieces together in this.
I mean, our ambition was system change and to create a system change company, this time sort of in real. Yeah. And in a couple of years' time, we'll find out whether that was a plate to full or whether it actually took us somewhere. The good thing in the work that you do and the work that we do is there's only noble failure. And the only thing that can't happen is to look back in a couple of years and not having tried stuff. So let's also do that with a certain sense of fearlessness and playfulness. The price of not having tried is far too high.
How do people engage with the work? How do they help out? How do they reach out?
It's a wonderful industry to be part of. It's not an industry, I know. So this whole community is it's very science-driven. It's very mission-driven. It's very young, other than me.
At your tender age.
At my tender age. It's very collaborative. So. I also think there's something else going on here. I mean, in order to be impactful and fast, and in order to have the means to build sort of very complex solutions, of course, we have to interact with capital markets and venture capital markets. And we should not allow any of them, and we should convince them that they should stop doing that, actually to enter this with a purely competitive mindset. So we need to build an empowering, enabling infrastructure together, an ecosystem where things are nicely dovetailing so that we are much quicker than we were if we were just sort of a couple of small startups handing in their competitive maps to get funded from their investors. I don't think that's the right mindset. That's not where we are in history. And so I really like this idea that sort of everyone talks to everyone. We've got this map of 300 nature codes, and I think I've talked to 150 of the CEOs, and every single one of them is a marvel. And I don't see any cowboys there. They might come, but the more we work together, and the more we we trust each other, and the more we exchange ideas, and the more we find ways to work synergistically, the faster we are, the better we are, far, the higher the ethos of this whole space will be. I mean, of course, I know what it is to balance sort of your company interests with the wider interests, and that's not always an easy conversation. We should always err on the side of collaboration in this space. Our competitor is ignorance, and our competitor is demise. Our competitor is not the other company that sort of has a smart idea around MRV. Let's immediately talk and see how we can work together.
Love it. Well, we'll leave it there. Appreciating Alexa Firmenich for connecting us. And yeah, thank you so much, Martin, for the work you're doing. Any final closing words?
I think if we listen to ourselves, having had this conversation, it's not a conversation we would have had 2 years ago. And that alone sort of should give us some optimism.
Well said. Thanks, Martin. All right, what'd you think? You can learn more at thelandbankinggroup.com. We will definitely be watching this project with interest, especially how the Web3 intersections evolve. For more great conversations like this one, go to maearth.com. And I'm also curious, what other voices or initiatives would you like to see highlighted on the show? Please leave us a comment or let us know in the community Discord. Thanks for tuning in, and I'll see you on the next one.
We have the carbon sinks that serves the world, cleans our environment, acts as sequestration of carbon that is produced by others. But we get nothing for it. It's not anywhere in our balance sheet. Everybody's assets are in their balance sheet. Some of ours are not in that balance sheet. The day we put our whole assets in our balance sheet, you will know that we are a very wealthy continent.